Putting solar panels on your roof seems like such a clear win-win, right? You get to help the planet and you get to shrink your utility bill. But what if there are hidden costs and complexities that the sales pitches don't really talk about? Let's take a closer look at that.
The dream is so powerful. Generating your own clean energy right from your rooftop, maybe even cutting the cord with the big utility company, and getting that true energy independence. It's a really appealing promise, and it's why thousands of people are making the switch.
And then you see a headline like this, and it just stops you in your tracks. I mean, it goes against everything we think we know. How could an investment in clean, renewable energy possibly be the worst financial decision you could make? Let's unpack that claim. So let's really examine the arguments here. We're not trying to say if solar is good or bad. The goal is just to understand the logic behind this pretty serious warning and maybe look past the glossy brochures to see what we might be missing.
The whole argument really boils down to this: a huge gap between what we expect and what the reality can be. We expect a simple green upgrade that just lowers our bills. But this source warns that what you're actually getting is a complex financial product, one that comes with a whole new set of costs you probably weren't thinking about. Let's break down what those are.
All right, so let's unpack these hidden costs. This is where we get into the nitty-gritty details the source claims are often conveniently left out of the sales pitch, and these are the very factors that can totally change the financial math of going solar. First up, there's this concept called performance degradation. Now, this isn't a defect or a sign that something's broken, it's just an unavoidable part of the technology. Every single solar panel, from the very day it's installed, starts a very slow, very gradual decline in how much electricity it can produce. So think about what that really means for your wallet over the long haul. A 15% drop in output over the panel's lifespan means the savings you calculate in year 1, well, they just won't hold up. By year 20, you're generating noticeably less power, and that means you're saving less money. And that degradation is really just the beginning. The source points to all these other ongoing costs. You've got maintenance for the panels, and especially for the inverter, that's the little box that actually converts the sun's energy into electricity for your house. Then you've got professional cleaning, maybe higher insurance premiums, and get this, the added expense of having to remove and then reinstall all those panels if your roof ever needs repairs. So this brings us to rethinking the ROI, or your return on investment. Because once you start factoring in the degradation, the maintenance, the insurance, that simple calculation you were shown in the beginning, it starts to get a whole lot more complicated. This chart here really paints the picture. The sales pitch might promise you the savings in that first bar, let's say 2,000 euros a year. But according to the source, once you subtract all these real-world costs we've been talking about, your actual savings, that second bar, could be a lot lower, year in and year out. And the costs aren't always just about money. The source also highlights what you could call a complexity cost. Basically, the time, the stress, and the sheer administrative headache that can come with managing your own little power plant. Take tax credits, for example. They're often pitched as this simple, amazing discount, right? But it's not quite that easy. You have to figure out if you're even eligible, file very specific and sometimes confusing tax forms, and navigate all the rules. And here's the kicker. It's not a cash rebate. It's a credit that lowers how much tax you owe, which is a really important difference. Okay, now for another one of the big selling points we hear all the time, that slapping solar panels on your roof will automatically increase your home's value. But the source suggests we should probably pump the brakes on that assumption. Is it really always true? Well, the reality is a bit more complicated. If you own the system outright, sure, it might add some value. But a potential buyer could be a little nervous about taking on technology that's already 5 or 10 years old. But if you've leased the system, that can throw a real wrench in the works, because the new buyer has to get approved to take over your lease agreement. It can seriously complicate a sale. Which brings us to our final section, the critical question. After digging into all these potential costs and headaches, what is the key takeaway from this entire perspective? What are we supposed to do with this information? Really, it all boils down to this. You have to look at the whole picture. Look beyond that initial price tag to the full life cycle cost. You need to understand how degradation will eat into your savings over time, get ready for the paperwork, know the huge difference between leasing and owning, and have realistic expectations about what it'll do for your home's resale value. So in the end, this isn't about scaring you away from solar. It's about making sure you make a fully informed decision. Remember that crazy headline we started with? Its real purpose is to make all of us just pause, look past the dream for a second, and ask all the right and sometimes the really tough questions before we sign on the dotted line.